Hello everybody, Zeph here with Zeph's Trading. Hope you guys are doing well today. Today is going to be a little bit of a different video. It's going to be a full explanation of the setups that I talk about every day in the chart review. It's kind of a long time video coming, but this is going to be a very basic introduction and some prime examples of price action trading system that I mainly trade 90% of the time, besides using quant trade edges systems and my own from time to time. But this is the main method I like because it's a scalping method of trading and has a high win rate, and it works with my personality. So we're going to go over it. We're going to do a little basic intro of it, a little summary of it, so you can better understand what I'm looking for when I'm doing these chart reviews and what I mean by each and everything. Kind of dive into it. So let's jump into it. A few things to note is PATS, or price action trading systems.com, is popularized by this system, who is the one who's kind of made it, and his name is Mac, and he has a YouTube channel, so credit goes to where credit is due. And then I'm pretty sure he got it from Al Brooks, because Al Brooks talks about it on his website, and he calls them high ones, high twos. In short, it doesn't really matter who made this. The main thing, this really all it is an ABC, Elliott wave theory. It's just a correction phase. That's pretty much all we're doing, is we're looking for a correction phase and going in the direction and looking for new extremes to be formed. So that's pretty much it. You can also call them bull flags if you want, but everything's a little subjective and you can kind of debate it. That being said, let's jump into it. So the main things are going to be key entry points, and you'll hear me say this in the chart reviews from time to time. These are specific price levels or patterns on the chart where traders look to enter a trade based on their analysis. They can include trend lines, moving averages, support and resistance levels, and that's the main things we focus on. And don't worry, I'm going to get into all of the technicals and really dive into it when I pull up the chart. This PowerPoint is just to get you familiar with the terminology and everything like that. So then you're asking, well, what are the key entry points? Well, key entry points are going to be trend lines, and trend lines are drawn on a chart when you have 2, 3, or more price data points connecting themselves, okay? They help traders identify the direction of the trend and potential areas of support and resistance. Trend lines are also just support and resistance, diagonal, not horizontal. You also have a 21 EMA, which I'm sure you're mostly all familiar with, but if you're not, it's just a commonly used moving average that traders use to identify the trends and potential entry points. It smooths out price data over a specific period of time, giving a clearer view of the trend direction. Then I hope you're all familiar with basic horizontal support and resistance levels. These are price levels where a stock or a market has historically had difficulty falling below, while resistance levels are prices where it has difficulty rising above. These levels are often used by traders to identify potential entry and exit points. A trend line rule. So when a trend line is broken, it can signal a potential change in the direction. Traders often look for a new high or low to be formed after the trend line break to confirm the change in the direction. So when do we enter? We enter when a new extreme is formed and or correction phase. So after a new high or low is formed, traders look for correction phase or a major trend reversal to occur at key entry points. This can present high probability trading setups. And then you're going to ask, what is a high probability trading setup? Well, high probability setups are with the direction of the trend and momentum of price patterns from human behavior that are repeatable in nature, as Mark Douglas talks about. Some of the things are what I would focus on in the beginning in this particular order: second entries, lower highs and higher lows, and triple tests. And the most important thing that I want you to get out of all of this is two things. One, the signal bar, and two, context. A signal bar are candlestick patterns that traders use to enter trades. These bars must be in the direction of the trend and momentum to be considered a valid signal bar, okay? The stronger the context, i.e. example, be clear trend, strong momentum, the better the setup is to be considered. And you could say some of these would be like hammer candles or full body green red bars, depending on the direction of the trend and what trade setup you're taking. Also, context. Remember to zoom out. Context is a huge thing. Are you near a major support level? Are you in a major resistance level? And that is something to be considerate of. So that being said, Now we can jump into what everyone loves, the charts. And I have quite a few examples for today. So as we were just talking about, we're looking for the key entry points, and I'm going to show you what these key entry points are. The key entry points are your trend channels. So you have your trend channels from your 1, 2, 3. There's 3 data points there. 1, 2, 3, 4, 5. 5 data points on the bottom. So that's one key entry point. A second key entry point is the, 21 EMA. That's another key entry point. A third is also going to be your swing highs, swing lows with support and resistance. So that's how we find them. That's how we draw them. That's how we look for them. The other main thing is context. We have a major spike in channel pattern. So a spike in it channeling. And so we are clearly above the 21 EMA. So our bias is bullish. So once we have a break of the trend line, as you can see here, we have a move up, break, correction phase. So the 3 bars down, this is a minor trend in a bigger picture. And that's why I like to color them so I can visually see them. Just makes it easier. You have a minor correction phase, and then this is when we're looking for setups in this correction phase. After your trend line has been broken and you're expecting price, because price moves in waves of 2, you're expecting a new high to be formed. So we have a come down here. We have a first entry long, pulls back, a second entry long. Now the thing is, context. This signal bar is not green. It is closing in this upper 1/3. It is a hammer bar. But unfortunately, I want to see a bigger bar, and I don't want to see bars that are overlapping in congestion. So what we can do is we can wait. And we can see if a better setup comes from a pattern. And it does. And we have a nice triple test right here. One, it's tested the support once, twice, 3 times, and we have a great signal bar going in the direction of the trend, which is a nice hammer bar. And that's when we enter 1 tick above or drop a limit order in and try to sneak your way in and put your stop underneath the signal bar. So that's one example of a triple test and what setup we're looking for and how we figured it out and how we look for them. And then just a few moments later, we now see that this is a nice spike in channel, even without hindsight. We have our data points here. 1, 2, 1, 2, 3, and 4. We have our clear trend line. We know we're above the EMA. We know this is bullish. Then we have a price goes and tries to go up once. That's the first entry. Comes down. Where are we? 1 key entry point, 2 key entry point, 3 key entry points. Major support across the board here, as you can see with multiple data points. 1, 2, 3, 4, 5. Multiple candle bars at that 5,300 mark. That's also another psychological move at the 5,300. Sorry, 5,300 mark. And we have a first entry, second entry long. Nice. Now this bar, you have to zoom in and make sure you're looking at it properly. But this is a nice bar closing on its upper 1/3. And with this outside bar closing, this is where the context comes in. People's stop orders are going to try to trail it 1 tick above. And that's when you can enter, put your stop where it needs to be, right underneath your signal bar. And you got a nice first entry, second entry long. You also are looking, do I have room to the top to scalp out? I have plenty of room here, as we did with this triple test to the swing high. I have plenty of room up to get 4 ticks or 8 ticks, depending on your system. And then just a few moments later, you have a higher low. Where is it? It's at the key entry point, 21 EMA, 1, 2, right off the trend line, and at previous support. So then you have a higher low here. As you can see, this high is higher than the previous low. That's all it is a higher low. It's not very complicated. So those are some setups right there. That's some real-time stuff on how I figure it out, how I trade the system. And I'll show you one last thing. So you have a higher low, and then you also have a lower high. So it's important to know when to get the lower high. And this is where context comes in and where our trend line is. So we have our trend line, we have a break, we have a correction phase, we had a new high. So we had our A, B, C, or we had a, what I like to just simply say as a 2-legged move because price moves in 2s. and then it tried to test it up. Bulls tried to go up once, and it failed. And that's when you have a lower high. The low of this high is lower than this high. Pretty simple stuff. It's not very complicated. I'm sure someone on YouTube has a whole explanation of it, but it's really not that complicated. But the main thing is the context, and that's what you're looking for. We're super far away from the EMA, so we're looking for at least price to come back and revert back to the mean. And yeah, simple lower high. And then if you made it this far, I'll show you probably the most powerful pattern that I know of. It's just in a very advanced setup, which is failed second entries. And I'm going to do this bar by bar because this is pretty important. If you're new to this, please just focus on the second entries, the triple tests, the lower highs and higher lows. Don't worry about these failed second entries, but I am going to teach them just in this video just to teach them. This requires a bunch of context, and this requires a lot of experience. I myself only take them if I'm pretty darn sure, I'm like 90% sure, and it's within my risk parameter. Okay, that being said, you have your high here. As you can clearly see with this green dotted line here, price came up, it did a first entry, it pulled back, did a second entry. So bulls, simply put, it tried to go up once, it tried to go up twice. When it tries to do that, you will enter one tick below the bar that it tried to go up twice in. That's where you enter, and you can go for your scalp. Price moves very fast after this, and why that is because everyone who's long here puts their stop underneath one of these bars. And as soon as it gets stops out, it just flashes down. So those are how failed second entries are. You could do it also with a failed second entry short. Again, these are advanced setups. I'll probably do a video way down the line on maybe a better explanation of it, but simply put, it's just bulls tried once, twice, and when they fail, and they tried twice and they know they fail, you enter with the momentum to the downside. That's a failed second entry low. Hopefully this covers some of the questions you guys might have here. And if you have any more, please shoot them down in the comment section below. If you're interested in joining the Discord, please check out my website in the description below as well. And I hope you guys have a wonderful day.